Good afternoon, everyone, for our next episode. Welcome to 62 Who Knew. Today we're going back to a little bit of an old-fashioned form of the show. I only have one guest, but it's an incredible guest. It's going to be one-on-one, him and I, for a very specific reason. One of our favorite guests, Mr. Sless, and I'm going to explain to you why we only have one guest in about 90 seconds. But first, as always, I want to thank last week's guest. I want to thank last week's viewers because, again, we keep going 75,000 up to 80,000. We got to reach that 100,000 mark. And I have a feeling, I say this for the last 4 weeks, but I really, really think this is the one that is going to break the 100,000 mark for sure. So let me give a quick synopsis because we do have new viewers every week, and I appreciate that. What exactly is 62 Who Knew? We'd love to tell you that. This show is about the double-edged sword, or if you wish, the mixed blessing of longer lifespans. Over the last several decades, modern science, medical breakthroughs, technology breakthroughs have never made the advances as they have in the last few decades. Myself, at 62 years old, diseases, viruses, quite frankly, that we all worried about when I was going to school are not even a part of today's children's and young parents' definition. And that's such an incredible thing. But with this double-edged sword, with this blessing of long life, comes something else. Unfortunately, only 1% of this great nation can afford to retire in their early 60s, knowing that they may have, or the odds are very good that they have, at least 30 more years ahead of them. No generation before us, not my father, not my father's father, we all had the same questions. Should I try and pay off my house before I retire? Should I take Social Security at 62 years old, or should I defer to a later age? Do I need to keep working? Do I need more life insurance? Can I even get life insurance as I'm approaching 62 years old? Do I need long-term care insurance? A crucial question in today's world, specifically after the last 12 months of COVID-19. Will I be needing a Medicare supplemental policy? All of these questions, my father and his father had too, but they were planning to live to be in their upper 70s or low 80s, not low 90s. And that's a big difference. And that's what that show is about. Every week we try and bring you a different expert to talk about getting from that age of 62 into the 90s. And quite frankly, with new medical technologies and breakthroughs coming in the next decade, very soon that will be the hundreds. I know a lot of you are laughing, but it's the truth. It will be the hundreds soon. How do we get there in a nice style of life, with peace of mind, with health, and with quality? And that's what 62 Who Knew is about. We're on just a little less than 2 years and building here in this great independent internet station, WeBeam TV, where the entrepreneur and owner of the company, Mr. John Gaston, has helped us go from obviously 0 viewers week 1 to a little over 80,000 last week. Obviously, the public has accepted this as a forum that they enjoy. So let's get to what we're going to be doing tonight. As many of you know, most of you know, we made a very bold, when I say we, 62 Who Knew, made a very, very bold commitment in the second week of January of 2021. We committed to be the tip of the spear in a movement to bring long-term care insurance to the masses. Long-term care insurance is a staggering product that all people should have, but quite frankly, for most of its existence, only the upper middle income or even upper income people have had that product. In fact, in most cases, those are the people that all the carriers, all the insurance underwriters target, as if the masses don't need these kind of things. They need them even more. But in order for the masses to have them, long-term care insurance, Medicare supplemental policies, life insurance, single premium products where you write a big check and you get a single premium product with life insurance riders, long-term care insurance riders, investment and annuity riders. How do we bring that to the masses? Well, one thing has to be for sure. The masses need a funding source. And there is no better funding source for people 62 years old and above for everything that I just mentioned than today's reverse mortgage. And I say today's reverse mortgage because it's nothing like the reverse mortgage of yesteryear. So today, one-on-one, no panel, we bring back Mr. Stephen Sless, president and founder of the Sless Group, president of the division, a national division licensed in 49 states. Don't worry, we'll get that 50th. And let's bring him on, John, one of our favorite guests, Mr. Stephen Sless. Thank you for coming back. You were here last week, too, so thank you for coming back so quickly.
It's a pleasure. Great to be back with you. Happy Monday. That was your, I've listened to just about every show monologue that you've done over the past 2 years, and bravo. Best one so far.
Thank you so much. Well, you know, you and I are emotional about this. I mean, it's our career, and it's the way we make a living. It's the way we support our family. But it makes it something special. They say there's I think there is a cliche, isn't there, Steve? Nothing's more dangerous than a man on a mission. And we do have a mission. And long-term care insurance and a few of the other products that I mentioned, they should be available to the masses, not just the elite. And we're lucky enough to have some other great people with us in this mission. Mr. Bill Comfort, Mr. Peter Gelbwax, Mark Goldberg, Carol Golden over at NAFA, just a few. There are many more. So it's a good mission. But tonight we're going to get down to it. Layman's terms, you know, you have the mustache like Tom Selleck, but he doesn't have this. No Hollywood, you know, people talking. I mean, I love the Tom Selleck commercials, but let's face it, he's paid. He's written a check to say that. And I love the commercials, and I thank AAG for being such a big stability, you know, in our industry. But they're going to hear it now from real people, from you, from a national expert. Who really owns the home in a reverse mortgage? The number one myth. Why are the borrowers totally protected and not liable, even when they're alive, for what they borrowed? What happens when the first borrower dies? How is that remaining borrower, that surviving borrower, protected? And something that most people don't know, how is the estate protected from never taking a loss? And when we're done with that, we're going to go into the purchase reverse mortgage that I have been saying for many years is the sleeping giant of the senior retirement real estate world. And we got the best person in the world here to do it. You. So
is this an hour-long show or a 3-hour-long show?
We're doing three. Oh, I didn't tell you. This is the 62 Who Knew telethon. I have Jerry Lewis, Ed McMahon communicating with me through a Ouija board. And
I know you and I can talk reverse mortgages for days, but we got a lot of work ahead of us in 55 minutes.
Actually, 47 minutes.
Oh my!
All right, so
all right,
I named the 5 myths. I'm gonna ask the question, and then truthfully, it's your show. I really want it to be your show. The number one myth, in your opinion, of a reverse mortgage. Go.
Number one myth is that for some reason it's a myth that the homeowner gives up ownership of the house, or they don't own the house, they can't leave the house to their heirs. Let's make that 100% clear right now. A reverse mortgage is just that. It's just a mortgage. Really not much different than a traditional mortgage loan, in that there's a lien on the house. In this case, the lien is a reverse mortgage lien. What makes the reverse mortgage so unique and so different is that this loan comes with flexible repayment options. So you can choose to treat it as a traditional mortgage and make payments if you like to, or you can defer payback until the last remaining homeowner leaves the home. Over the past year with COVID, everybody's gotten very comfortable with these loan deferments. almost half the country is in some sort of loan deferment because they had trouble paying their mortgage payment when COVID happened earlier last year. So the concept of deferment has become very accepted. But for some reason, reverse mortgages still have not become as widely accepted. We're changing that, and that is changing quite drastically, and it has done so over the past 5 or 6 years. But myth number one, let's just do rapid fire here. You still own your home, 100%.
Absolutely. All right. Number two myth to me, it almost carries to number one, which is, okay, Stephen, we believe you. While we're alive, we own the home. It's when we die, that's when you guys take it, right?
Right. We're gonna steal all their equity. We're gonna take their house. Their kids aren't gonna get any inheritance. We hear it all.
Yeah.
I got an email this morning from a builder, and I know we're not talking about the purchase yet, and I don't want to get too far ahead of myself, but we have a client that's using a reverse mortgage to purchase new construction. That new construction is almost done. It's a over 55 community. It's going to be done in June, and we're going through the application process right now. The client is super excited, did all their due diligence, did their homework, came to the realization, you know what? This is an incredible way to use a reverse mortgage to preserve more cash flow later in life. She's agreed to take out the reverse mortgage and use it to buy the house. Well, the builder emails me this morning. I can't believe that you would offer seniors this horrible, terrible loan. And the email was a lot more colorful than that, but went on to basically say that we're scamming all of our clients. And, how do you respond to that, Michael? You've gotten those emails before. I mean, my response was, look, I've done this for 15 years. I have only done reverse mortgages, and my team has only done reverse mortgages for 15 years. Don't you think that I may be out of a job, right? If I was scamming seniors out of their house for 15 years straight, don't you think there would have been some federal investigation? Let's lay it out, okay? Reverse mortgages are one of the safest, probably the safest and heavily regulated mortgage on the market today. You still own your home while you have a reverse mortgage, and you have the ability to pass the home on to future generations. So if you want to leave the home to the kids or your grandkids, you can do so. Reverse mortgages are non-recourse loans. There is federal reverse mortgage insurance on every type of reverse mortgage loan that's on the market today. And what that insurance guarantees is that you will never pass on a debt that you or your heirs have to pay out of pocket if in the event you wind up owing more on the reverse mortgage than the value at the time of sale. Okay? So in layman's terms, if you pass away, you leave the home to your kids or your grandkids or whoever it is you're going to leave the home to. Well, they have two options. They can keep the house, and to do so, they need to pay off the reverse mortgage loan. They can use proceeds from your life insurance, they can use other savings or assets, or they can refinance your reverse mortgage and pay it off with a traditional mortgage. They can also sell the house through the proceeds of the sale, pay off the reverse mortgage loan. Any additional money is theirs to keep. If you pass the house on to your kids and you wind up owing more on the loan than the value at the time of sale, your heirs, your estate is not held liable. You can have $1 million in the bank. That $1 million cannot be touched. None of your savings, none of your assets can be touched because these are non-recourse loans.
I don't think people realize when they get a regular mortgage, and let's face it, we do in the tens of thousands reverse mortgages per year. The regular mortgage world, some people refer to it as the forward mortgage world, do millions upon millions. And I don't think people realize that that personal guarantee that they are giving the bank is allowing them after their death to say to their children or their heirs or their estate attorney, well, you're upside down in the house. Did mom leave any annuities, stocks, bonds? Everybody goes, no. We'll just short sale it. Those days are over. There were too many short sales and too many losses. Banks are going after personal assets, and that can happen with a reverse mortgage. And I think that's staggering. I'm going to play ask the expert because, I know the answer to this question, but I want our audience to know this. Let's just say the house is upside down. In layman's terms, it is worth less than the people owe on it. But it's down here in Florida, and it's on the Gulf, or it's near a golf course or on a golf course, but it's $100,000 upside down. And one of the children want to buy it. How do they buy it?
Yeah, great question. They can buy it for 95% of the appraised value. That's it. They can finance it in their own name. They can, if they're of age, they can take a reverse mortgage and use the reverse mortgage as the source of financing. But they would owe 95% of the appraised value at the time that they wanted to purchase the house.
And again, I don't want to be disrespectful to anyone, but I don't think people grasp that. Let's just say the house is worth $400,000. But because we're in another recession, or God willing, mom and dad live to be in their 90s, and they owe $500,000, they are $100,000 upside down. If they said we want to buy that house, and I'm just going to name names, to Wells Fargo, Bank of America, Regions, or any servicer, any holder of a mortgage, that holder would go, of course you can buy the house. It's $500,000 to get the title, but it's only worth $400,000. And it doesn't make a difference what your credit score is and how much money you make. No one's financing a $400,000 house when it costs $500,000. I don't think people realize that. But not only with the reverse mortgage will the heirs, they're not getting it for $400,000. They're getting it for 5% less than that. They're getting it for $380,000. There's their 5% down payment. It's staggering that, again, the consumers of the world and the financial planners of the world just haven't wrapped their arms around that.
Yeah, and that's starting to change.
Yes, it is.
As there's been more academic research that have come out, and we touched on this on the show last week. I mean, the American College, all these different PhDs and financial advisors that are studying retirement for a living. They have alphabet soup next to their name. They have more credentials than you and I will ever have. They're some of the smartest people in the world that study how to optimize a retirement income strategy. They're the ones that have really changed the conversation the most about reverse mortgages. We tend to piggyback a lot on what they say because their concepts and their theories they're common sense. So let's finish the rapid fire, and then I think we should pivot to just why reverse mortgages have the bad rap, because I would love to have a crack at that.
Yes, go for it.
Well, let's finish while the questions are hot on your mind. Keep bringing the questions at me, and then I think we can transition.
And then we'll go for that for another reality check of why they have the bad rap, because there is some good reasons why they have the bad rap. The reverse mortgage of yesteryear, not today's. Okay, the next one, which again I feel is just so important, is what happens when the first borrower dies. Because let's face it, the odds are that is going to be mom or grandma. Men are usually the older borrower. Men, based on insurance actuary tables, live 5 years less than women. Used to be 7 years. We're catching up. Now it's 5 years. There is an old insurance joke. I know you've heard me say it on the show a lot. Why do men die earlier? Because they want to. That's why. So I know our women viewers are going, change the channel, Harry. But that is an old joke. But when mom loses dad, when grandma loses grandpa, and they've been married 45, 50 years more. My grandparents, one set, were married 66 years. Statistics say that mom or grandma is losing 60% of the household income. That's staggering to think about.
Yeah.
Because she's probably in her 80s. Give us the rights of mom now with a house with a reverse mortgage and being able to live there with no payment.
Yeah, well, let's look at what would happen if they didn't have a reverse mortgage, and let's say they had a traditional mortgage with years left on the term. right? I mean, those payments need to be made next month and the month after and the month after that. A reverse mortgage comes with flexible repayment options. So there's the option to forego making mortgage payments until the last remaining homeowner leaves the home. So in the circumstance that you laid out, if one spouse dies, the other one continues to live in the home, continues to have the reverse mortgage. If there's available funds in a line of credit or a 10-year payment where the reverse mortgage lender sends the borrowers a check every month, those funds are still available. Those checks continue to come in, but there's no monthly mortgage payment. And so the other spouse would have to pay the property taxes, would have to make sure that they stay current on the homeowner's insurance, would have to make sure that they maintain the home and keep up the home and keep it in good repair. But there's no monthly mortgage payment. And that spouse, that widow, can remain in the home for the rest of their life as long as they're able to, using the equity in the home to enable them to age comfortably in place.
Right. Now, I haven't told this, and it'll take about 2 minutes, probably in a year, or I at least haven't said it in this fashion. I think you've heard me say this, but again, the emotional value of that, at 62 years old, in my mid-50s, I'd say in my whole decade of my 50s, and I'm sure this is true for everyone, you start to go to more funerals, unfortunately, for your older uncles and aunts. You know, your parents are usually gone, grandparents are certainly gone earlier, and you're used to that. But when you start approaching that 50, 55 mark, suddenly you're the oldest uncle. My cousin and I are the uncles, and you're just going to a lot of funerals. And I've said this before, at almost every funeral that I've been to, of my own relatives, my friends' relatives, among the love and among the grieving, there always is that question. And I'm not saying this just because it's in the moment. It's absolutely true. Not a week later, not later that night when we're at our house, but at the funeral. Somebody turns to a brother or a sister and says, "How is Mom going to keep the house? Yeah. She can't make the payment without Dad's retirement." But when they have a reverse mortgage, and I say this with a smile on my face because all my relatives do, it isn't how is Mom going to make the mortgage? How is Mom going to keep that house? It's, do you think Mom will want to stay in the house? Because she has the option. It's free. And if people could just go 20, 25 years in the future and think of their mom having that option, I think everybody would be dialing your number right now for a reverse mortgage.
And it's not just the reverse mortgage that offers that peace of mind. It's all of the other advanced planning strategies that come with having a reverse mortgage. What does having a reverse mortgage enable you to do? Well, it could enable you to purchase long-term care insurance. It could enable you to defer Social Security from 62 to 70, particularly for the breadwinner, so you can guarantee your spouse is going to be left with a larger Social Security check when you pass away. It's all of these other advanced planning strategies. Using home equity first, being proactive with using home equity, and using home equity instead of drawing from your other investment portfolio, allowing those investments to compound and grow. So it's not just, I have a reverse mortgage and now I don't have to make a monthly mortgage payment.
Right.
That's great. And that's a huge benefit of having a reverse mortgage. But the greater benefit is everything else that a reverse mortgage enables you to do to secure the best possible retirement that you can.
Absolutely. Well said. Well said. All right. And then our last one, and then we're going to go back to why we have this bad rap. Now the last borrower dies. It's unfortunate, but they're both gone. And now the children / heirs / estate has the house. Oh my God. What happens now?
Well, here's what happens more often than not, and it's quite troubling. And it's a big reason why reverse mortgages get the reputation that they do. Oftentimes, the borrowers of the reverse mortgage fail to tell the family, fail to tell the heirs and the kids that they even have a reverse mortgage. And it's a shock. And when both borrowers pass away and the house is left to the estate, finding out that your mom and dad had a reverse mortgage and that you're not going to get all this inheritance from the home is a big shock. We encourage all of our clients, look, let's open this up to conversation. Let's ensure your family, your caregivers, anybody that you may be leaving the home to, your heirs, your estate, they should understand why you have a reverse mortgage, what that enables you to do, how that enables you to live a more comfortable retirement, but what are the implications and what are the responsibilities when you pass away? It's actually quite simple. The responsibilities are the reverse mortgage needs to be paid back, and there needs to be a commitment as to how that's going to be handled within 30 days of the borrower passing away. It is critically important that you, the heirs or the estate, remain in constant communication with the service provider on the loan. Whoever has the reverse mortgage, whether it's you, your mom, your dad, your grandma, your grandpa, they get a statement in the mail every month, and that statement is sent to them by a service provider. It's that same service provider who you need to talk to and work with to inform them what you want to do. Do you want to keep the home and try to secure financing? Do you want to sell the home and pay off the reverse mortgage? How will the reverse mortgage that's now due and payable, how will that be settled? The heirs and the estate have 6 months to settle out the reverse mortgage and pay off that loan. Now, what happens if 6 months goes by and the home hasn't sold? There are exceptions that you can get. There are extensions to that 6 months, but you have to work with the service provider. Too often, they either don't know that mom and dad had a reverse mortgage, they're not educated, they're not well informed. It's already difficult enough to deal with the loss of a loved one. Now you throw into the equation, oh my gosh, well, they had a reverse mortgage. Well, how does this work? And what do I do? And who do I talk to? Next thing you know, 30 days go by, a month goes by, 3 months goes by, and as that time is ticking, so is the clock on paying off that reverse mortgage or qualifying for an extension. So it's critically important to inform your loved ones of the decision to take a reverse mortgage. They should understand why you're doing it. They should understand what it enables you to do as well while you're alive. They also need to understand what their responsibilities are and the timelines after you pass away. And what we find is more often than not, that doesn't happen.
That's correct.
And that's where a lot of the negative misperceptions about reverse mortgage come into play.
I have found that there's a real age bracket difference. The 80 to 90-year-old people who are very hesitant to do this because their whole life they've wanted to give their children a free and clear home. I've had situations, and I know you probably have had more than I, where the children are going, Mom, Dad, we don't want your home. Please take the reverse mortgage. Live a good life. But they're very anxious, that 80 to 90-year-old group in today's world, to bring the children in. And, oh, my God, the 70 to 80, a little less, in my opinion, but still a very, hey, let's get my son and my daughter on the phone. I'm finding that today's 62 to 65-year-old, which, let's face it, is 10 years ago's 50-year-old, maybe even less. Yeah. When I say, do you want to get the children on the phone? Do you want this? Do you want that? I have a good percentage of them saying to me, Michael, I love my son and daughter, or my 2 sons or my 2 daughters more than anything. But it's none of their business what I'm doing with my house. You don't get that from the 70, 75, 80, 85-year-old group. But today's young 62-year-old, 65-year-old, they're still working, they're wheeling and dealing, they're running their own companies. Do you ever get that from the boss? Why should I discuss it with them? They don't discuss their more.
All the time. All the time. And hey, we're not here to tell you what kind of conversation to have with your kids or your loved ones. That's your business. Right. But what we are encouraging is that, you have an estate and you have heirs that are going to have to handle this, regardless whether you want to tell them now or whether it's their business now or not. it is going to be their responsibility to handle this, and they need to be well informed. It's actually not a very difficult process post-death of both spouses or the individual borrower. It's not a difficult process so long as you maintain contact with the service provider.
Right.
It's when there is no contact or contact goes awry, that's where, look, these lenders, they want their money back. They lent money, and in some cases, they're lending money without receiving a dollar of payback for
decades.
10 years, 15 years, 40 years. They want their money back, and they want their interest. They're a lending institution, right? They're not in this for charity. They will foreclose if there's no communication. So communication, again, is paramount.
Can you imagine, though, one of the things you said is that once the estate or the children make their decision, they have 6 months to either sell or refinance. And, of course, there's no payments during that 6 months because it's a reverse mortgage.
Yeah.
Can you just imagine calling a Bank of America or a Wells Fargo or a Regions Bank and going, look, Mom and Dad just passed away, so we're going to take 6 months to make up our mind. Right. And by the way, we're not making any payments. Thank you so much. Bye-bye. Can you imagine the bank's reaction? Foreclosure would be starting 3 minutes after that conversation.
Yeah, that's a great point.
It's really amazing.
Mom and Dad pass away, and you're the heir on this estate. You owe next month's payment, whether you like it or not.
Yeah, exactly. Now, do you have anything further before we go on to another topic that you want to talk about again, why you just named one great reason why we have the bum rap. But do you have any other reasons?
Yeah, I wanted to just touch on, because I get asked this question all the time. I mean, multiple times daily. What you're saying, Steve, sounds fantastic. But I talked to somebody's sisters, brothers, uncles, cousins, neighbors, friend. I ran this by my banker, and the banker says not to do it. Or I ran it by my mortgage person that I've used to get my mortgage for 30 years, and they say not to do it. Well, turns out that person doesn't do reverse mortgages. So why would they recommend a product that they don't originate or they can't help you with? So I want to talk for a moment about why reverse mortgages get the bad rap that they do.
Absolutely.
And that rap is starting to change. The reputation has changed a great deal. Mm-hmm. Here's why. Reverse mortgages have been around now for close to 40 years, right? Think about traditional mortgages. They've been around for hundreds of years. It's still a pretty new concept. When reverse mortgages first came out, they were viewed as a loan of last resort. And they were used as such until about 2014 to 2015.
Absolutely.
And the concept from the financial planning community was when your investment portfolio is depleted, when you've used every dollar, then you turn to the house and you use a reverse mortgage. And you can take all this cash out of your home and you can use that cash to hopefully live, 5 years, 10 more years. Hopefully that's going to be enough. There was really no concept around it. There was no strategy other than when you're bupkis, when you're broke, you have some equity in your house, and a reverse mortgage is a way to make those funds accessible. And what happened was you had people that were already out of money. They were already having difficulty paying their bills. Perhaps they already couldn't afford to pay the taxes and the insurance on the home. They were turning to a reverse mortgage as a loan of last resort. And they were taking large sums, hundreds of thousands of dollars in some cases, out of their home. But if you're already broke and you have no safety net and you're in your 60s or 70s and you're going to live another 20 or 30 years, what's $100,000? I mean, it's a lot of money. $100,000 is a lot of money. $200,000 is a lot of money. But not if your expenses are $4,000 a month, $5,000 a month, or upwards. That money is going to run out. And that's exactly what happened. The strategy of using the reverse mortgage last was a failed and very flawed concept.
Yes.
And it took until 2014 and 2015 for academia, the financial advising community, and the federal government to say, you know what, we got to wake up here. This is not being done the way that we envisioned it. The reverse mortgage came out in the 80s as a way for homeowners to use their equity to age safely in place. It was never meant to be a Band-Aid on an open wound.
That's right.
But because that's the way that it was used, it caused too many people to take it as a loan of last resort And then the result was they couldn't afford the taxes and the insurance. If you don't pay your taxes and your property insurance, I don't care if you have a reverse mortgage or a traditional mortgage or no mortgage at all, you will be foreclosed on. And correct. Unfortunately, very unfortunately, because a lot of good people took bad advice and they lost their homes because of it. But nobody ever lost their home purely because they had a reverse mortgage. As we said in the beginning of the show, this isn't about the reverse mortgage in and of itself. This is about the other advanced planning strategies that a reverse mortgage can open up for you.
Exactly.
We look at this, Michael, you and I, because we specialize in reverse mortgages, we look at reverse mortgages from the top down as a piece of the overall puzzle, not the puzzle itself. Nowadays, reverse mortgages are being used properly. They're being used to limit portfolio withdrawals, to allow your investment portfolio to grow, to delay Social Security at 62 and bridge the gap from 62 to 70, increasing your Social Security check by 60, 70%. They're also being used to purchase homes, so you can afford a home more suitable for your lifestyle needs as you're growing older. They are so different today. Look, Michael, you know this. Before 2015, if you had equity and you were over 62 and you had a pulse, we could lend you money on reverse mortgages.
That's right.
There was no credit check. There was no income check.
Yep.
So, look, were they bad loans? No. They weren't bad loans. I've been originating reverse mortgages long before 2015. I was a believer then. I'm a believer now. I'm more of a believer today, now more than ever. And I'm more passionate today more than ever because now we're working with financial advisors deeply, closely, and we're seeing the result of how a reverse mortgage can fit into one's overall retirement income outlook. We're not just providing the loan of last resort. We thought we were doing great things for great people back then. And it turns out that our philosophy was flawed. The way that reverse mortgages were used were flawed. We've learned, we've adapted, we've overcome a lot of these misconceptions about reverse mortgages, and we stand here as an industry stronger today than we ever have been before, with a product stronger today than it ever has been before. But there's too many people that are just ignorant. They feel that they can provide advice or consult you on something that they truly have no clue about. And what I really dislike more than anything else is, look, my mortgage license, Michael, your mortgage license, it enables us to do both traditional mortgages and reverse mortgages. You do both very, very well. You're an anomaly.
Thank you.
Right? Not many in the country can do what you do and handle a large book of reverse mortgage business and a large book of forward mortgage business. Myself and my team, we made the decision close to 15 years ago that reverse mortgages, they were going to be our niche, and we were going to be the very best at reverse mortgages. But we didn't want to be a jack of all trades. We want, jack of all trades, master of none. Right. We wanted to be the very best reverse mortgage entity to turn to. And I think we've done a pretty good job of getting that. We view reverse mortgages as a comprehensive financial strategy. Too many people use traditional mortgage loan officers that don't have the extensive reverse mortgage background that you do, that don't understand the intricacies of the products and how. I mean, look, the reverse mortgages and traditional mortgages, they're apples and oranges. They couldn't be any different. But too many people think, I can do both. And they think that because they're greedy and they don't want to give up the business to somebody who actually knows what they're doing.
Exactly.
And that's not a knock on any of my forward mortgage, traditional mortgage friends, because I'm going to get a lot of nasty emails and probably a lot of nasty calls after this show. But my point is this, and I apologize for the long rant, but my passion starts to come out when my juices get flowing about reverse mortgages. My point is, talk to an expert. Talk to somebody who knows what they're doing, that's done them for a long time, that has the extensive training and the tools and the resources to help you make the best possible decision. Admittedly, reverse mortgages aren't for everybody. We turn down probably 20% of the clients that come our way because it's just not the right fit for their specific situation. But don't trust your neighbor. Don't trust the mortgage guy that you worked with for 30 years. Be careful who you take advice from, because it could be dangerous advice. Do your own due diligence, become educated, become empowered, and you decide whether this is the proper solution for you or not.
Yeah, we're always plagued by they. They said this is not a good idea. I'm 62 years old. I still don't know who they are. But be that as it may, you brought something up, and we did it again. There's only 16 minutes left, which trying to describe a purchase reverse mortgage in 16 minutes is not
We can do that.
But you brought up the purchase reverse mortgage, and you and I both know if financial planners, I won't even say realtors, financial planners grasped the purchase reverse mortgage for all their clients that they now suggest, offer an opinion to pay cash for their home, they could use that extra tens of thousands, but let's be frank, in most cases, hundreds of thousands in liquidity to make sure that client has everything they need to make it into their 90s and well into their hundreds. So I'm glad that you're the expert tonight. Go ahead, explain us the Heck'em for purchase in 15 minutes.
So we'll try to unravel it in 15 minutes. I think we can do so. Just in case we don't cover everything, cheap plug, I have a video on my YouTube page detailing the reverse mortgage. I highly recommend you view it. If you search the Stephen J. Sless group on YouTube, there's a lot of videos there. We have a whole video series, but go to the one about the reverse mortgage for purchase. It's probably the most viewed one that we have up on the page, and I think you'd get a lot of benefit from it.
Very cool.
A reverse mortgage for purchase, the concept is very simple. It enables you to purchase your next primary residence with a one-time down payment of roughly 50% of the home value. It's designed to enable you to purchase your permanent home that's going to be more suitable for your long-term needs. So the best way that I can describe this is just by giving an example of a recent client that we've had. Here in Maryland, they had a $400,000 home. Okay, they owed $100,000. It's too much house for them. 3 floors, 3 stories of stairs, too much walking. It's just not a home that's conducive for their lifestyle as they're trying to grow old at home and age comfortably in place. They want to be on a 1-floor house, a ranch-style house. Great. They sold their house. Through the proceeds of the sale, they paid off the $100,000 mortgage on their house. They had a traditional forward mortgage. So now they walk away with $300,000. Their thought before speaking to me was, great, $400,000 is a little bit too much house. But a $300,000 house, we can still get all the amenities that we had in our former home, and we can be on 1 floor. And we have $300,000 in cash, so we're just going to pay cash for the house. And this way we don't have a mortgage payment later in life. They were referred to me by their financial advisor. Thank goodness, because I've done a lot of legwork and groundwork to educate this financial advisor to be on the lookout for this type of situation, because this is the perfect situation for somebody to purchase their next home with a reverse mortgage. So he referred the clients to me. We consulted with the clients. They did have $300,000, and they were dead set on paying cash for the house. But in consultation with the financial advisor, we discussed, well, what if, right? What if you didn't have to pay $300,000 in cash? And we could still ensure that you didn't have a mandatory mortgage payment. But instead of using all that cash, now you could put down half, $150,000, towards the purchase of the home. And that's the only money that you ever need to put into the home, other than the homeowner's insurance, the property taxes, and the maintenance on the home. And what if you could take the other $150,000 and give it now to your financial advisor? What would that mean for your overall retirement outlook? What would $150,000 of tax-free, clean cash being injected into your retirement income strategy, what would that do? Well, did wonders, right? From the financial advisor's perspective, it extended the longevity of their portfolio by years and years and years.
Absolutely.
Now they don't have a mortgage payment. They now bought the $300,000 home. They put down $150,000 in cash. They gave the other $150,000 to their advisor. They grew their overall retirement nest egg, preserve more of the assets that were under the management of that financial advisor, and they're in a home conducive to their long-term needs so they can comfortably age in place.
It is a staggering principle that you would think the country has wrapped their arms around, like the traditional reverse mortgage, but they simply haven't yet. Now, I'm one of those people. You said you might get some angry or mean emails from the forward people from one possible comment that you made. Hopefully you don't. I always get bad emails when I say what I'm about to say. When I say that it's the greatest product since sliced bread, the purchase reverse mortgage, I always get a lot of people in the industry saying, but it's less than 4% of our business. Michael, the product has failed. I have been calling it the sleeping giant of the senior real estate world for going on 12 years now. I always get people back saying to me, great people, friends, going, Michael, your sleeping giant is in a coma. It's not sleeping anymore. It drifted into a coma. And I always come back with the same thing. The purchase reverse mortgage has not failed the reverse mortgage industry. The reverse mortgage industry has failed the purchase reverse mortgage. And that is why we must, and that's why you and I are having certain discussions off camera. We must get the forward mortgage world involved in the purchased reverse mortgage. Because to all my reverse mortgage brothers and sisters, and there's just so many of them out there, and they have so much integrity. I mean, I've never met a reverse mortgage person that didn't leave their house for an appointment with the sole goal of making life better for that senior. I can't say that about the probably 1 million plus regular mortgage people out there. And I'm not saying reverse mortgage people don't want to make money. We have families to support. But I have yet to meet a reverse mortgage person in my 15 years in the business that didn't put the client first. But reverse mortgage people don't know how to talk or deal with a type A personality, hard realtor. Now, that's that. Now, realtors are going to get mad at me. Reverse mortgage people are going to be mad at me. The realtor that you write a contract for, and it's got a closing date. And it's not maybe if you really can do this, Mike, get it closed by the 30th of April. That's the contractual date.
Yeah.
Moving trucks on both sides have been hired, let alone the domino effect that each one of those people is buying a house and using the proceeds from the last sale to buy another house. So every purchase mortgage really involves 4 or 5 families. Now, let's face it. We're good at what we do, you and I, Stephen. But if we're going to be a day late with a closing, we call our senior client and say, I'm so sorry. There was lightning. The surveyor couldn't get out. We didn't realize that we did this. The appraiser was late. The dog ate my homework. Would it be okay if we closed Thursday instead of Wednesday? And in every case, the elderly client goes, of course. We're retired. We're already in the house. Yeah, as long as we close by the end of the month and we don't have to make a payment next month, just like you told us, Stephen, we're fine. You call a realtor or a client in a purchase mortgage, say, I'm sorry, we can't close on Thursday. We need to close on Friday. You get yelled at.
Oh, there would be a lot of 4-letter words on the receiving end of that phone call, for sure.
And for good reason.
Absolutely.
The electric has been scheduled to be turned off in the old house and turned on in the new house, as well as the water, the trash, the this. Maybe they're moving out of the area. The children are starting, well, there's grandchildren. The people are starting a new job. The moving truck is on its way from Baltimore to Florida. It costs $500 to $1,000 to say to those people, can you keep the furniture on the truck an extra day? And I have to say,
don't you think that's the biggest fear? Well, so to me, there's 2 fears from realtors. The fear number 1, reverse mortgages take forever to close. And Look,
False.
if you're not working with
Yeah.
with a company that's competent, they can take forever to close. If you're working with a traditional mortgage loan officer that does 1 or 2 reverse mortgages a year, they're going to take 90, maybe 120 days to close your loan.
If ever.
We're closing reverse mortgage. Our average is 26 days, but that's us. We do reverse mortgages and we do lots of them every month. That's one of the fears, is that reverse mortgages take too long. They're not going to close on time. The other fear, and I can understand this. Look, if you're a realtor and you have a client that comes to you, a buyer that comes to you, Mr. Realtor, I have $300,000 in cash. I want to buy that $300,000 home in cash. We could close next week, right? So from a realtor's perspective, why would I inject the risk of a mortgage and the fact that now we got to submit an offer with a mortgage? This market is wildly competitive right now. Cash offers
FHA
sometimes
mortgage
are better, especially an FHA mortgage. And so that's a valid concern. But my counter to that always is, what's right for your buyer, right? I mean, is it right for your buyer to spend $300,000 in cash? Now, let's address all these misconceptions that you have about reverse mortgages and that they're not going to close on time. Look, we've never missed a contract date ever, as long as the reverse for purchase product has been around since 2009. We've never missed a contract date. I think that speaks volumes to our dedication of ensuring that we're going to close these loans on time. But that's, it's injecting a mortgage that I think is the biggest fear, which is why I think it's not the realtors that we as the industry need to educate. It's the financial advisors.
Exactly.
The financial advisors that are going to protect and preserve more of their assets under management and inject more assets into that AUM, into those assets under management, to be able to grow their clients' nest egg, grow their clients' investment portfolio larger and last longer. That's the biggest beneficiary. Of course, the buyer is the biggest beneficiary as well. But at the financial advisor, it's a huge win for them and for the client.
And for the client.
We talk about long-term care insurance a lot on this show, Michael. What if that $150,000, instead of putting it into an investment portfolio, what if that client took $100,000 and paid for one of these one-time pay long-term insurance policies? Now they're in a home more suitable for their long-term needs. They don't have a mandatory monthly mortgage payment each and every month, regardless of their financial situation, and they're covered. Right? They're good. They don't have to worry about a long-term care event. I mean, my goodness. And they can go pad their portfolio by $50,000 or whatever that number is. What a reverse mortgage can do as a domino effect to create one positive benefit after another positive benefit after another positive benefit, it's unbelievable.
And I want to say, we only have about 3 minutes remaining, but to those realtors, and I was so excited about tonight's show. I think I told you off air. I joined more groups on LinkedIn. I put this out to more people than I ever have. I usually don't put our show out to realtors. This time I did, to several groups on LinkedIn that ranked 50,000, 70,000 members. And I want to say something to the realtors listening, because I think one of the mistakes the industry makes, and again, I know I'm going to get some emails over this, is should that realtor, that type A personality, who's being offered a $300,000 cash deal, go, wait a minute, I have to do what's right. Let's turn this into an FHA mortgage. Should they? Yeah, morally. Business-wise, is it ever going to happen? Not very often. And I think that's one of the reasons, like you say, that we're not doing enough of them. But I have to touch on what, in 30 seconds or less, what a realtor actually does for a living. So now I want the real estate agents to listen to me, because I'm doing this 39 years, 15 reverse, but all 39 forward. So I have many relationships with great realtors, okay? How many times do you have a client with $300,000 cash, and they tell you they want a 3-bedroom, 2-bath with a study and a swimming pool and a large kitchen and a spillover hot tub, and this is the area I'd like to be in, because we want to be close to the beach. You know that, Stephen? That's where we're coming down here. And you look and you go, wait a minute. We can get you exactly what you want, but that's not 300,000. That's 400,000. And that client calmly comes back and says, I'm sorry. My financial planner or my son or my daughter says we shouldn't take any money out of our portfolio. Enter the reverse mortgage. Let them buy that $400,000 house.
Point.
Put
Such
200 grand down. They have the house of their dreams. They have an extra $100,000 because they were going to put up 300. They're only putting up 200. Here's the part that I want the real estate agents to listen to. They're referring you to every friend they have because you got them a $400,000 house for $200,000 down and no payments. And I have to say it, isn't your commission higher, Mr. Realtor? Aren't you getting paid on a $400,000 house rather than a $300,000? It's time realtors started embracing this for what it is.
It's an ethical way to upsell.
That's right. An ethical way to do it. All right, we got 48 seconds left, which is just great because we need another 3 hours. But as usual, thank you. As always, next week we're going to do something a little different, a little bit of a human interest story that kind of revolves around grandparents not being able to hug and see their grandchildren. We're going to have some grandchildren and grandparents on. They Zoom with each other. They have car parade birthdays. They wave outside, but no hugs and kisses. It's played a very big role in our country because of COVID-19. And we're going to take a break from all the serious stuff, do some loving stuff next week. Stephen, thank you as always. And to the 62 Who Knew audience, thank you so much for being here.